The most common trading scams which have robbed victims of $100,000 and more. Here is the list. Be familiar and pay attention to learn more about these scams. We want to protect you before your savings will be lost. Promissory notes, Ponzi or pyramid scams, real estate investment fraud, predatory lending, and social media or internet investment fraud. In a low-interest economy, the prospect of high-interest promissory notes may entice investors, particularly the elderly and those on a fixed income. A promissory note is a written commitment to pay, or return, a specific amount of money at a future date or upon demand. Interest is usually paid on promissory notes, either at regular intervals prior to maturity or at the moment of maturity. Promissory notes are a type of debt instrument that companies can use to raise funds. They are often sold to sophisticated or institutional investors. However, this is not the case for all promissory notes. Retail investors may be offered and sold promissory notes. Ponzi or pyramid scams. A Ponzi scheme is a plan in which previous investors are compensated using monies put by later investors. In Charles Ponzi's instance, it wasn't just the amount of the con that mattered, it was also the speed with which it was carried out. Ponzi made an estimated $15 million in 8 months by persuading lenders to invest in international postal reply coupons. Despite the fact that he wasn't the first to do it, his story became so well known that the basic principles of a pyramid scheme, taking money from a new investor to repay an old one, were named after him. Real estate investment fraud. The promise of making rapid money through real estate investments continues to entice investors. Scams in real estate investing are a common investor pitfall. Investors should be wary of real estate investing seminars, especially those that are aggressively pitched as an alternative to more standard retirement planning strategies such as stocks, bonds, and mutual funds. Attendees at these conferences may hear testimonies from persons who claim to have doubled or quadrupled their income by investing in real estate. However, these assertions could be nothing more than a bunch of nonsense. Predatory lending. Predatory lending is when borrowers are subjected to unfair, fraudulent, or abusive loan terms. These loans frequently have excessive interest and fees rates, deplete the borrower's equity, or place a creditworthy borrower in a lesser credit-rated loan, all to the lender's profit. Predatory lenders take unfair advantage of borrowers' lack of understanding of financial transactions by employing pushy sales tactics. They persuade, induce, and aid a debtor to take out a loan that they will not fairly be able to repay by dishonest or fraudulent conduct and a lack of transparency. Predatory lending refers to any unethical activities used by lenders to attract, encourage, mislead, and aid borrowers into taking out loans that they cannot afford to repay or must repay at a rate that is significantly higher than the market rate. Predatory lenders take advantage of borrowers' situations or ignorance. A loan shark, for example, is the prototypical predatory lender, someone who lends money at exorbitant interest rates and may even threaten violence to collect debts. However, stronger established institutions such as banks, financial firms, mortgage companies, attorneys, and real estate contractors engage in a significant amount of predatory lending. Social media or internet investment fraud. People may communicate with one another more swiftly and readily than ever before, thanks to social networking on the internet. Investment promoters are increasingly using the internet to locate investors and their cash. A social network is a group of people, or businesses, who share common interests, lifestyles, relationships, beliefs, or other convictions. Platforms like Facebook, Twitter, LinkedIn, eHarmony, and other social networking sites and communities have made it easier for users to meet, interact, and develop connections with people from all over the world. Con artists join social networks looking for victims, while social networking helps people connect with others who share similar interests or viewpoints. The con artist establishes credibility and obtains the trust of other members of the group by joining and actively engaging in a social network or community. A con artist can acquire trust and credibility more quickly in online social networks. The scammer gets instant access to potential victims' internet accounts, which may contain sensitive personal information such as their dates of birth, phone numbers, home locations, religious and political beliefs, career histories, and even personal images. The con artist takes advantage of how easy it is for people to exchange personal information and background information on the internet and uses it to craft a clever and highly targeted pitch. The con artist acquires access to the first target's friends and colleagues, allowing the fraud to spread quickly through a social network. If you have been scammed, do not hesitate to reach out to us. Visit our website at www.easychargeback.com and fill out our application form now.